Welcome to the Private Lenders Podcast with your host from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, thanks for checking out the show. We do appreciate it. Today we're going to be covering strategies for working with mortgage brokers to get deals closed. Something that happens when capital markets and the amount of cash and capital out there in general for this kind of niche, when that gets disrupted in some fashion, like rates going up, lack of liquidity, we start seeing more broker deals because they're looking to more sources in order to place that loan to get funded. And we probably typically run around 10% broker business historically. And recently, in the past year or so, year and change, it's been more like 20%. And we're going to talk about some of the reasons why, and then also our strategies for effectively working with brokers to get deals closed.
We get a lot of questions in the mastermind group of, should I work with brokers? How do I work with brokers? What should they charge? How should the process work? You should absolutely work with brokers. They have a good bit of business that comes in. Now you got to be cautious and you got to do it the right way, which we're gonna talk about. But I know a few lenders that will just say, "Hey, I don't work with brokers. Go away," which is bad business, right? Brokers are out there,
For sure.
Generating business on your behalf. It's a very easy way to get a deal, and you can also have those brokers put to work and help you, collect the information that you want. Now, keep in mind, what our thoughts are with anybody that does not have an economic interest in a deal, right? You have an economic interest in the deal, and your capital source has an economic interest in the deal, and that's it. So a mortgage broker's job is to originate a loan, broker it to you, and get paid a fee. But they don't have an economic interest in the performance of that deal. They might say hey, I want to make sure this deal does, but they just don't. And it doesn't matter how good a person that they are. You have to underwrite the deal based on what you want. And you also have to communicate with the borrower. So typically the process when a broker calls us will be, can I sign up with you? That's kind of in industry lingo. And we don't really have a formal sign up process. We'll say, listen, I'm happy to work with you. We protect all of our brokers. We cherish our relationship with you. Let's get on the phone real quick and figure out some of the details to make sure it's something that we can work with first, right? Because it might, you got to double check to make sure it's in an area that you lend in. The numbers are going to work. LTV is going to work. The terms that you're going to charge are going to work. So I'd like to get on the phone quickly, go through it, introduce yourself, build a relationship, make sure the deal as a whole has legs and it works. And if it does, the next step is typically okay, why don't we do this? Why don't you talk to your borrower to see if they verbally agree with what we discussed, the terms, they can make the numbers work. And if so, let's just schedule a really quick call with the borrower, just so, we can make sure everybody's on the same page. And sometimes a broker will be like, no, I don't want you talking to the borrower. I don't want them knowing who the lender are, or you're going to steal my borrower. And, the good thing is, as a private lender, and typically the operator of a hard money lending company is usually involved in the process, right? Because a lot of us are smaller operations where you can, confidently say, listen, I'm not looking to steal your borrower. I just want to make sure that they're aware of the terms and that we're all on the same page. Ask them a few questions. We'll keep it simple. I can tell them, I can say I'm your partner, whatever you want me to say, right? Whatever helps out the broker, because brokers are very, they put on their defense hats sometimes because they might have been screwed by another lender or they didn't get a commission or something. And I get it. So it's somewhat of a soft subject. So you want to do it in the nicest way, but it's important for you to communicate with the borrower just so you understand. I'm not going to state that all brokers are like this, but a lot of the times you're only hearing 50 to 80% of the story of what's going on. Not because they're lying to you, because they don't know. They might not have asked the question. What's important to them might not be important to you as a loan underwriter or as a hard money lending company. So it's important to talk to the borrower at least once, right? You don't have to after that, at least once, just to make sure everybody's on the same page.
Yeah, it does make a lot of sense. And what you're starting to get to is that, just like anyone else in business, brokers very in quality, right? Some of them are all over it, professional, organized, know what they're doing. And some of them are just out there forwarding emails and don't really know what's going on. And so it is important to cut through some of that. And like Jason was saying, like we like to get, I mean, I like to mention conference calls often because I think that has the broker feel a level of comfort. They're not being circumvented. They're not being, uninvited from the conversation or the process. It's like schedule a conference call, or like maybe after you float like the initial loan terms, if the borrower okays it, schedule a conference call to, knock out all those questions that you'll have that the broker probably wouldn't think of, that kind of thing. And just to make sure that you know who you're talking to, you know their story, you can get a gauge on how competent the borrower is, the one who's actually going to be executing on the project. I think that's important as well. Couple other details. Ideally, a broker is going to have a fee agreement signed by the borrower stating what they're going to get paid on a deal, like 1%, maybe 2% is most common. That's not always the case, right? There could be other arrangements like that's the best way to have it and have the broker get paid on the settlement statement, just like everyone else. And that's usually the way it works. On occasion, a broker might ask you to add their fee into your origination fee and pay them after closing. And that can be done too. It's not ideal, but that can certainly happen as well. Another thing that I wanted to touch on is the difference between residential deals and commercial when it comes to broker business. So talking about resi, if you think of like top rehabbers and some of the most busy borrowers doing like fix and flip deals, for example, they typically don't use a broker. They're going directly to the lenders in their area. They probably have a few different ones that they work with. They're not paying a broker to be part of the situation. So that means on resi deals, oftentimes the broker business is going to be a little bit more creative, harder to place, maybe a little more hairy, which just makes the underwriting job and the stuff that we're talking about related to communication all the more important. So something to be aware of there. When it comes to commercial, for some reason, it seems like I know a lot of commercial brokers, commercial lenders, there's pretty much always a broker involved when you're talking about, larger, 7 figures and up commercial bridge loans. A broker's always involved. And those brokers, the ones that I know, and I know a number of them, are very professional, very good, organized, like they're real educated financial professionals, right? And you can use that, like if you think of just talking about private lenders in general, if you think of like the dozen different ways in which we market for business, there are lenders out there who exclusively just call on brokers and have relationships with brokers in order to generate their business. So there's something to be said for that. Definitely. One other tip I wanted to point out, because I had a few things on a mental checklist for this. I would be careful not to be too reliant on the broker. I think that can make lenders get a little bit lazy in having the broker like run around and collect documents and relay with title and insurance and everything else. I think that there's certain things that it's right in the loan process for the broker to be involved with. And then some stuff is kind of a lender's job, right? So I think a mistake can be made, a bit of a pitfall is getting a little bit lazy and relying too much on the broker during the process.
Yeah, that's right. And again, I'm not going to state that a broker is going to mislead or lie to you, but a lot of times they might not know the answer, right? You know your business better than they know your business, right? They're also used to dealing with institutional capital sources and banks and brokering to them. They're not used to dealing with like a one-off lender who makes all the decisions. They're not used to dealing with the owner of the company or the direct underwriter of the company. So it's a little bit different. So it's good to create a relationship. I know, a lot of folks in the mastermind group have asked related to, what can a broker charge? How do they get paid? Who pays them? The borrower's paying them, right? So in essence, we're lending out at 12.99 and 3, and the broker can charge on top of that up to whatever they want. Typically we cap them at 3%. We think it's fair that, they shouldn't make more than we do in lending terms, but that's not always the case. I mean, sometimes, there's lenders out there that I know that broker can charge whatever they want. We look at it that like we don't typically we try to deal with as sophisticated borrowers and investors as possible. So like if we're charging 3 points, like there's not enough room for a broker to charge 5, 6, 7, 10 points. Like we don't want that to happen. Usually they're charging 1 to 2 points. I would say that's kind of the industry average. 1.5, maybe 2. every once in a while, if it's like a low LTV, real kind of creative, outside the box deal, it might be 3 points, but we try not to have them charge any more than that. So, utilize that for what you think's best, but something reasonable, right? You don't want to completely jack the borrower in that particular case. But I'll tell you that they've been a really good lead source for us since day one. I mean, we also came from the business of mortgage banking and being mortgage lenders and mortgage brokers on the conventional side. So like we knew kind of how that process worked and how to communicate with them. So we cherish those relationships. But we have a few brokers that have worked with us over the years for long periods of time. They've also lent borrowed money from us. So they turn into a good source and they know how we work. They know what we do, how we do it. Just it's important to make sure and you understand that, they don't have an economic interest in the property. I can't say that so many times. I'll talk to people and be like, hey, so can you ask the borrower this? And they'll be like, well, let me go for the broker. And it's like, yeah, this might not be the time to just ask the broker or go through the broker and rely on what they say. You need to do your due diligence yourself to make it clear. You can certainly allow them to help gather information for you and things like that. But sometimes, especially on the creative deals, you need to really make sure, the borrower knows what's going on. So make sure you definitely talk to the borrower. Again, don't circumvent them. That's bad business. Don't circumvent, don't try to go around them and do whatever with the borrower. Like Chris said, set up a conference call, make it very, transparent of what's going on. And, you'll create a good relationship, and broker business is good business. And again, a lot of people might have bad, experiences with brokers. Just be transparent and communicate the types of deals that you like and you don't like. A lot of times be like, oh, let me talk to you about this deal, or I have this deal, or I have this deal, or I have this deal. A lot of them are good salespeople, but they're brokers. They're not necessarily lenders, and they want to be brokers, and they're good at being a salesperson and brokering and generating business. They may not be good on the back end side of it. So, respect them for what they are, and, complement their business, and hopefully you can do a lot of business that way.
Yeah. I mean, I would put effort into the relationship with good brokers, just like you do with good borrowers. Like, take some time, go out with people, have lunch, happy hour, what have you. Like that's very, very valuable stuff and totally worth investing in. So hopefully you are getting some good broker business, because it is up. It is up. If you have private capital to lend, I mean, there are brokers out there looking to place deals. So I would definitely put an emphasis on that, especially now. Real quick, while we're wrapping up here, in case you haven't heard about it already, we have our next Mastermind Inner Circle event early May in Dallas. If you are interested in checking it out and applying, go visit hardmoneymastermindinnercircle.com, and we'll see you here next time on the podcast.
Thanks, guys.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.